Today I'm with EC Vidra, and in many ways we couldn't ask for a better guest speaker. So EC is co-founding and managing partner of Reimagine Ventures. Before that, he was heading the Google's entrepreneurship initiative in Europe and in the UK. And he's an entrepreneur himself. He actually has 2 patents under his belt. So he's a great combination of an entrepreneur that is now an investor and has a lot of things to teach us about this world. So EC, without further ado, thank you so much for coming.
Thanks for having me. Hi guys, morning.
And I want to start by asking you about your investor journey. So tell us a little bit of why did you end up doing that?
Sure. So when I was in college, I was part of a course not very different than this one. That was a multidisciplinary program on entrepreneurship, where people came from different backgrounds, computer science, business, law, etc. And we got the best professors in school to create a startup in the last year of college. So back when I was doing it, it was more academic, meant to be more academic, but actually my team and I created a real startup that actually we could raise money for. We were very excited about it, and we started pitching investors. And when I was sitting in those meetings and thinking about, how can we solve this huge problem, and I was talking to investors, I instantly knew I'm going to be sitting on the other side of the table someday. I was hooked. Just like the problem solving, the need to learn constantly new things got me very excited about it. And then I moved to San Francisco. I moved to New York after college, and then I moved to San Francisco. And I met with a friend who was a senior venture capitalist, and I said, hey, I want to be a venture capitalist. What do you recommend? And he's like, well, if you want to be a venture capitalist, go and get some experience first. Work a little bit, learn how to build products, etc. So I took his advice, and I went and became a product manager, senior product manager, principal product manager. I led teams and budgets and saw how products are built and scaled. And then after I finished my MBA at London Business School, I was fortunate to get hired by Google. I did a bunch of things in Google, but my passion was always startups and venture capital. Is there anything I can do that has to do with startups and venture capital? And one day, Eric Schmidt gave a speech and said, Google is going to open an innovation center in London. That innovation center ended up becoming Google Campus, and I was chosen to lead Campus from the ground up. Fast forward, Campus became very successful. To give you an idea of scale, we did 1,000 events in the first year alone, and launched a number of programs and support, mentorship, rotated accelerators every quarter. And Google then asked me to scale the model internationally, so I joined the team called Google for Entrepreneurs to lead Europe for them. At the time, I already started making small angel investments, but then the managing partner of Google Ventures came to London and said, how would you like to join Google Ventures and open up our European office? And I was thrilled, because finally, where I was aiming for became a possibility. So I joined Google Ventures as the first general partner outside of the US. And then after some time at Google Ventures, I got very fortunate that several different people reached out to me and said, can we start a fund together? And one of them, which I ended up partnering with, was Kevin, my partner at Reimagine Ventures, who was part of the entrepreneurship program with me back in college. And together we started Reimagine Ventures, and I'm happy to tell you more about it.
Yeah, indeed. So tell us more about it, because we've heard from last week, we heard from Joelle about how is it to, come up with a business idea and then build your startup, and the importance of your partner in that process. And now I want to hear a little bit about what about partnering when you're starting a venture capital fund?
Yeah, well, that they say that when you take an investor on board, it's like a marriage. And I think that it's even more severe when you take a partner on board. I think that it's very important to pick your partners well, and to have somewhere where you can find that you bring complementary skills and have the trust and the ability to work well together with mutual respect, but also with maybe some healthy challenging and the ability to argue and fight and make up well. So basically, when Kevin and I started Reimagine Ventures, we realized two things. One is that when entrepreneurs, the best companies are going to get multiple offers. And second, if everyone has the same color money, it's very difficult for a small fund to win the best deals. So you really need to have some differentiation and a special flavor. And we realized that, in 2018, when we launched Reimagine Ventures, there was already a lot of money in the market, and there's some benefit in specialization. So when you specialize, you understand, ideally, everything that is happening in your vertical. The vertical needs to be large enough for it to yield, great returns. But on the same time, it needs to have enough innovation and growth. And the idea was, Kevin was already investing on behalf of a large media conglomerate into Israeli startups. I had the background of Google Ventures. And we said, why don't we create Reimagine Ventures essentially as a multi-corporate Google Ventures where we invest independently for financial returns, but we have a number of strategics backing us in addition to the usual suspects in venture capital. And these strategics were all along the value chain of media and entertainment. So broadcasters, publishers, telcos, agencies, etc., investment banks. And then basically what that enables us to do is two things. One is receive real-time feedback from the market before we invest, because we understood the problems that the industry faces, and we had a direct line with the executives that are leading huge business units in these companies. We can already see when something came to our table, we can already see this is solving a big problem, or we can quickly verify it. And the second thing is that we could help our portfolio companies with additional value beyond the money. So that means that if there's a very competitive round and you're a specialist, if you're doing your job well, typically people would want your feedback and advice. And B, if you already are building a relationship with the entrepreneur, you have very clear ways that you can help them right away beyond the money. So we took an opposite approach to spray and pray, and we created Reimagine Ventures a bit more as a boutique, where we're seeing over 700 companies a year, but we invest in about 4 every year. And then we work very closely with the management team on building their value proposition and helping them with their go-to-market. And in Fund 1, which we're currently wrapping up, we focused only on Israeli or Israeli-related startups. So that was a small enough pool that we could sort of put our arms around, but big enough in terms of sort of company creation, innovation, and strong technical teams, where the value that they needed is more of this go-to-market business value.
So you are Argentinian born.
Yes.
But you're Israeli raised.
Yeah.
So tell us a little bit more about that connection that you have with Israel and how you think about their startup scene, et cetera.
Yeah, so I was born in Argentina, moved to Israel when I was 8 years old, and I grew up in Israel, but then after college I spent 5 years in the States, and now I've been living in London for the last 14 years. So I always say, if you like steak and hummus and chips, it's a good combination. But my kids are British, speak with a British accent. My wife is American, and basically I'm very confused. I think being an immigrant or moving around as a child and then also as an adult gives you this, develops a muscle that you need to adapt, and you need to work hard to earn your seat. So I would say, if I trace it back, moving to Israel was my parents' decision. I'm very happy about it, but I was a child. I didn't really make it. But for me, moving to the US was sort of like a big career transition, and that gave me this worldview and this school of how to do business. I remember when I first moved to New York and joined the startup, as an early employee, I saw the startup grow from about 100 people to 500 people, $600 million in revenue, 15 offices. It was like a rocket ship taking off. I remember sitting in meetings and telling myself, like, oh my God, these people are so smart. Like, I need to do better. Like, I need to learn everything, read everything, just try to do every task as if it's my last. And I think that sort of mentality served me well when I moved to San Francisco, which is more laid back. So coming from like tough New York, and then London, as you guys know, it's the best of both worlds, right? Like we have the fun and the work all combined, and it's all compacted into 11 square miles, which is nice.
Absolutely. So one thing I really like about Reimagine Ventures, and I guess about yourself as well, is that you've taken all the things that have happened in your life and you've put them all into one project that you're pursuing. So you can see lots of aspects of your background when you think about Reimagine Ventures. So you have the Israeli connection, but you also have this wonderful experience you had at Google. And if I'm an entrepreneur and I'm thinking, which is the fund that I would like to see as a partner in my company, I know that if I go to you, then I'm gonna have this amazing, contact to strategic partners that it's very difficult to find somewhere else. And so I love that notion of just, you take what it's been given to you and you're putting into a project.
Instinctively, I agree with you. And I think that's, at the end of the day, business is very personal, right? Like you end up doing business with people you like and trust, but you don't have to take it from me. Frontline Ventures did a big entrepreneur survey where they ask founders, what is the reason that you would choose one VC over the other? And the number one reason is that the VC understands and believes in my industry or vertical. So I think that's already like one big plus of being specialized, that I'm betting my financial success on the success of the vertical. So if someone is pitching me something that's in this vertical, we can already skip a lot of the market, etc., because we buy into the same core beliefs. And the second thing is personal relationship and trust. And unfortunately, I think there's also a lot of bad practices, like in every profession, right? Like you can come up with people that are good and good to work with, that you can trust, and you can come up to people that are less trustworthy or good to work with. And at the end of the day, it's a two-side road, right? Like you have to give and you have to contribute and you have to help regardless of what you think the outcome is going to be. And if you do it enough times, you start building a reputation, and that ends up creating a virtuous cycle. But I think that this is a good rule for life, is like always think about how you can help, regardless of how it's going to end up. The reality is 99% of the companies I meet, unfortunately, are not going to be a good fit for investment, but that doesn't mean that that's where the relationship ends. Typically, when an investor tells you no, it typically means not right now or not yet. It doesn't necessarily mean no forever. And second, even though you're thinking that when you meet an investor, it's like a transaction where you're going to give an explanation or a pitch, and the investor is going to return an offer or a check. I think there's a lot of things that happen before that actually materializes. So there can be mutually beneficial intros, there can be feedback, that can be information or material that you weren't exposed about your market or technology that could be helpful for you. And I think it's important to create that dialogue.
Now let me try to push back a little bit on the idea. So one thing that we spoke about last time in the town hall is the business of intermediation. So as an entrepreneur, you have two choices, at least. You could go to Reimagine Ventures, or you could try to go directly to the corporate venture arm of one of these strategic, sponsors, et cetera. Why should they go to you? Like, what's the additional value add? Why intermediate?
Great question. So first of all, a lot of the corporates or strategics don't invest in early stage. They find it very hard to take on the risk on their own balance sheets, and unfortunately, early stage venture, I don't need to tell you guys the stats, more than 90% of startups fail within the first 3 years. By the way, we also assumed that we would have a high failure rate. Knock on wood, It hasn't materialized yet, but I'm not saying it's not going to happen, but almost 5 years in and it didn't happen yet. So one, they don't do it early stage. Two, there is a signaling risk as an entrepreneur when you're going and working with a strategic. And to give you the simplest example, let's say that you're developing some technology that is very strategic to Coca-Cola. If they invest in you, chances are that Pepsi won't work with you, right? So you have to keep yourself neutral as far as you can. At some point, it does make sense to take strategic money, but typically it starts on the later stages, from Series B and up. And the third thing is that for a startup to like if you're taking money from a multi-billion-dollar conglomerate, it can be very risky for an early stage startup. There's the concept of open innovation, where the corporate would say, like, here are my problems, come and help me. Well, as a startup, you can do one thing really, really well, but it's difficult to do multiple things really, really well. And if you end up becoming essentially a problem solver for the corporate, it can sometimes be on the expense of building a large business for yourself. So you might have earned a client, but it comes at the expense of building a business. So I think entrepreneurs would be wise to sort of like choose the right form of capital for each stage. And now that we're seeing a market correction, 2023, with prices coming down and with the multiples for growth stage companies coming down based on what's happening in the public markets, I think that we're also seeing the return of sort of like distinct rounds, right? Pre-seed, seed, Series A. Rather than skipping a step and trying to raise as much money as possible, we're seeing entrepreneurs wanting to build their companies on fundamentals and not let the valuation get ahead of the value, because that's what happened in 2021. And I think now people are waking up with the hangover where they find it hard to justify the prices that they raise money on because money was cheap and plentiful.
So in some sense, if I can summarize a bit, so if you partner with Reimagine Ventures, then you get a lot of the good stuff that comes from the corporate, but you're keeping your options open, right? You're not necessarily tying yourself with a specific company that you're unsure at early stage, is this the best partner for me? And they're not going to potentially provide as much value add as you can.
Exactly. So it's much more hands-on. We automatically reserve funding for follow-on when we make an investment decision. So basically, you're taking a long-term partner into building the company, and you know that you're going to get sort of like a sparring partner, if you will, to make big decisions together, to open doors, and to help you get the strategic value from multiple directions, not just one corporate.
So changing topics a bit. So you raised 2023 already, the topic of 2023, market correction, not doing great. But the other big topic in 2023, from my perspective, well, even from late 2022, is generative AI. Yeah. And so we see the multiple applications and potential that this technology has to change our lives. And I want us to learn a lot from you, who is at the head front of this.
We didn't talk really about what Reimagine Ventures invests in, but I think it's a good segue to why generative AI matters to us. But in a nutshell, we believe that, it's a fact that there's 5 billion people connected to the internet, and historically we've been spending more time connected than any other generation before us. And of course, money follows attention. So as we spend more time online, we spend more money, and our habits are changing, right? Technology is enabling us to do things a little bit different. So we change how we educate ourselves, how we exercise, how we shop, how we take care of our health, etc. And a lot of it has become technology enabled. So we started Reimagine Ventures with this concept of let's invest in the way consumers spend their time and money and the technologies that are driving that. And for us, it's been pretty much split in half. Half of our investments are in consumer startups, and that's where we can see venture returns. Typically, it's been gaming, but we've also done creator economy, consumer digital health, etc. And the other half are the technologies that are changing basically how consumers spend their time and money, with an emphasis on content creation, distribution, and monetization, and that's where generative AI comes in. So today I'm going to give you a short overview of generative AI from the perspective of an investor. We're not going to go deep into how it works. I'm assuming that, maybe show me by a raise of hands, how many of you use ChatGPT? All of you? Yeah, doesn't surprise me. And how many of you use other tools that are not ChatGPT, like DALL-E or other generative AI tools? Okay, some of you. So we'll talk a little bit about generative AI from the investor perspective, what it means, and also some of the challenges of investing in generative AI. So what is generative AI? Generally speaking, we're talking about artificial intelligence technology, that comes from multiple disciplines, machine learning, deep learning, etc., that enables us to create different types of content. So ChatGPT that you're most familiar with, it's a large language model, or LLM, that enables us to generate text from text prompts. It's extremely powerful. I don't think I need to tell you guys what ChatGPT is capable of doing. But we also have generative AI for audio. For example, you could go and record, type a message in text and sound it in the voice of your favorite actor or actress. It can speak also translated into any language. There's generative AI for code, and we'll talk a little bit about some of the organizations that are using it today and what output they're getting, et cetera, et cetera. Generative AI for images like DALL-E and Midjourney, and the list goes on. This is not an exhaustive list. So if we talk about images, this is just some of the output that you can get already today using practically free tools to generate images. So if I had to explain in a very high level to a 5-year-old how this works, imagine that you have a library at home and that library has like 10 books. Those books are filled with words. So now we're trying to understand what words are in those books, and we know that, for example, before the word dog, there's always like a letter A or the, etc. And now we want to scramble it in a different way to create something completely new. So if you do it with a large enough data set and you tell the machine, I want you to create this, like a film portrait of an old man with wrinkles, etc., etc. It will take everything it knows about these concepts and try to put it together, and then you can always iterate and generate new images. But it's really incredible, sort of like the level of imagery you can get to today. This is just a small prompt I did last night. ChatGPT is basically the fastest growing consumer product of all time. I think these numbers are super underestimating the real picture. So according to recent reports, ChatGPT passed 100 million users in January, 2 months after launch. As a comparison, it took TikTok 9 months to get there. But according to a new report by SimilarWeb, ChatGPT had about 600 million users in February. So we're talking about a huge leap in adoption of AI technology, which until 3 months ago, even though these large language models existed, the adoption wasn't really there. So GPT, which is one of the models that we're talking about in generative AI, existed already for a number of years, but it wasn't widely accessible. And what changed is sort of like this public access to ChatGPT. Even though it's extremely impressive already today, basically GPT is about to move from the 3rd generation to the 4th generation. There's some caricatures saying like that this is the universe and this is GPT-4. The current model has about 175 billion parameters. The new models will have 100 trillion parameters, and we don't really know yet. It's meant to launch later this year. I'm not sure it will be widely available from the get-go, but we don't really know yet what it's capable of doing. We do know that you will be able to essentially train your own models and get answers that are tailored to your specific needs as if they are coming from one particular source. For example, you could be having a conversation with, asking the generative AI to respond as if you were Elon Musk, or respond as if you are an astronaut in NASA, and take only those training models as the way to generate the answer. So the ChatGPT or generative text is just in the beginning, and it's already very, very powerful. This is taken from Sequoia's view on generative AI, and you can see that the categories and the implications of using generative AI are vast. So this is, generative AI has the potential to disrupt many, many industries and many, many use cases. So when we take, for example, 3D models as just one category, 3D models are huge in architecture, they're huge in manufacturing, they're huge in gaming, they're huge in media and entertainment, and this is just one category. So really generative AI has the potential to automate and change every industry as we know it. It can also be a bit scary, and we'll talk a bit about the downsides of it, but this doesn't mean that we are replacing humans, right? Like when the co-pilot was invented for planes, it didn't mean that suddenly we don't need pilots anymore. And when the word processor was invented, it maybe meant that we don't need typewriters, but it didn't mean that people stopped writing. It's just a new tool to get the job done. And I think in a similar way, generative AI, even though it will create some displacement in the short term, it opens up huge possibilities for tools to increase productivity and creativity across various industries. So I mentioned coding before. There's one product, for example, that's called Copilot, and it's launched by GitHub. It's generative AI for code, and organizations that use Copilot report that about 40% of their code is already generated with AI. So think about it, coding, which seems like one of those areas that will not be easily automated, is already very much automated. So when you're thinking about generative AI, you have to separate it into sort of like two big layers. In a second, we'll talk about more layers, but just to simplify it for you, you have the underlying, basically, models, and this is what I'm showing on this slide. The underlying models are essentially those deep learning, machine learning libraries that are able to create the magic, if you will. And then you have the application layer on top. So far, the model layer has been mainly populated or created by large tech companies. There's some exceptions here and there. So Stability AI is actually based in London. Just as an example, this company raised $100 million in seed funding. AI21 Labs, it's an Israeli startup that's developing their own large language model, which competes with GPT. And that started by the head of AI at Stanford. They also raised like tens of millions and are probably now raising even more. But generally speaking, you have NVIDIA, Microsoft, Google, which was really one of the early pioneers in sort of like natural language processing models that are sort of like pushing this agenda forward of developing, doing research. But it's not until OpenAI came out with ChatGPT that suddenly all of these models were exposed to the end user, and it created a bit of discomfort for the others, which they're now trying to catch up, and we can talk a little bit about what it's doing to the market right now. So that is the model layer, sort of like the core layer, and on top of it you have the application layer. And the application layer are essentially entrepreneurs that are taking the APIs and those models and thinking, what kind of business can I build on the back of these technologies in order to disrupt an industry or create new types of content or package it better for the user. So a good example would be a company called Jasper. So ChatGPT, as you guys know, you can enter a text prompt and it would give you a text output, and you can really, really challenge and create marketing campaigns. You can create ad copy, a LinkedIn post. You can write an essay, which I'm sure none of you have done for your homework. You can do all sorts of things. Jasper AI is using GPT as the API layer. So you would probably think, okay, so why do I need Jasper? I can just use ChatGPT. Well, Jasper AI is already worth $1.5 billion, and the users that are using Jasper are not so quickly leaving it to use ChatGPT. Why? Because they built specialized, tailored products that have everything that their clients need in order to integrate it into their workflows and use their copywriting service for marketing campaigns, etc. So when you're creating one of these, and here's Jasper. When you're creating one of these application layer startups, there are some risks that we're going to talk about, sort of like the pitfalls of investing in generative AI. But if you're doing a good job, you're able to build a really large company. So I didn't include it in the presentation, but there's one of those memes going around from Scooby-Doo. I don't know if you guys know what Scooby-Doo is even. That basically someone is unmasking the villain, and it says AI startup. So we don't know what the AI startup is, and then when the villain gets unmasked, it says oh, this is just a startup using the OpenAI API. And the criticism is that you can't really build a generative AI startup taking someone else's technology. But on the flip side, I saw a post from the founder of Kayak, and the founder of Kayak said that we couldn't build a business in booking for travel, taking an API from the OTA providers, but Kayak sold for $5 billion, and the OTA providers never got anywhere near. So I think it's still very early to judge, and I think the packaging, the user experience, and sort of creating the right environment for consumers to adopt your product can still go a long way. So today there's about 600 startups that are documented in generative AI. There's many more that are integrating the OpenAI and other generative AI APIs into their products to increase their workflows. And I think that this is just the beginning. If we had to do this lecture again next year, this will be probably 5-10 times bigger. Sorry.
Just a very quick question on understanding. Do these startups then pay OpenAI because they can use the...
So different startups use different APIs. OpenAI just now came up with a pro product that they charge $20 a month. I'm not sure that it's available for commercial use. I believe that some layer of this is given for free, especially if you take open source models that are not necessarily OpenAI. So it's still very early innings. OpenAI is trying to figure their own revenue model, but according to recent reports, Microsoft invested $10 billion into OpenAI, where it will receive those $10 billion basically by OpenAI paying the first 75% of the revenue in the next few years back to Microsoft, and OpenAI is projected to make about $1 billion in revenue in 2024. So even though today you use it for free, they already are generating revenue. That revenue is expected to grow, and I think the business models will adapt as well. So a bit in numbers, what does this all mean? So according to recent studies, AI in general, not just generative AI, will have a 1.59 trillion in economic impact. So this automation is going to create a lot of productivity and ability to produce more with less. Already in 2022, generative AI startups raised 1.3 billion. And today there's about, self-documented, as I said, about 600 plus generative AI startups, but I believe that the actual number is much, much higher. This is just a chart showing how VCs are sort of following this trend. I should warn that we are at peak hype cycle for generative AI. So I'm personally very excited about this, but I'm also an investor, and I have to look at it also from a very skeptical way of not rushing into this, because you can think about the wave of commoditization, right? If you invested in a language generating model or like something like a copy AI, 2 years ago, and you felt really good about yourself because look how many people are adopting us, it's possible that you had those 2 years to enjoy rapid growth, but as ChatGPT becomes ubiquitous, perhaps people are deciding not to renew your product because they're able to get a free alternative. And I think because we're having so much innovation in this space, it's very important to not get caught in this like wave of commoditization and think about what's next. But we talked about the economic impact of AI at 1.5 trillion. The generative AI market is basically expected to grow to about 63 billion in size by 2028. So where is the money going? This is just a recent report by CB Insights showing the distribution of where the funding went in 2022. It's still very early, so it's a bit early to judge sort of like where we stand, but you can see that a lot of it went for visual media, perhaps VCs that got excited after they got their Lensa AI avatar of them looking like a Roman emperor or an astronaut. Some of it went for enterprise and the ability to automate processes in the workplace, so summarize Slack threads, write emails for us, etc. And then a large portion of it also is going to the underlying technology, which you can see in this Andreessen Horowitz graph really clearly. So we talked about it in a very simplistic way, but basically at the bottom of all of this, you have hardware, right? Like you need processors that are able to create very big, resource-heavy calculations. And then you need the cloud platforms to serve it. So I'll tell you a little bit about the generative AI companies that we invested in at Reimagine Ventures, but I can just tell you that when we invested in the first one, that is a generative AI video company, where you can basically type text and create a video, it used to take about 24 hours for that video to get created. Every pixel on that video was AI generated. And now the cloud infrastructure that they've built, in addition to the capabilities in the market, they can do it in real time or near real time. But you have hardware, then you have cloud platforms, and then you have the foundation models, which we talked about in the different slide. And this is sort of like the operational layer that we talked about. So, or both of these. So to understand generative AI, you need to understand that this is a complex sort of like structure and stack, and you can invest in every different layer of this. I think the model level and the cloud platforms is already like very big companies, right? So like Microsoft investing 10 billion in OpenAI shows you the scale that you need in order to play in those territories. And I think where a lot of the VC activity will happen is in the apps or end-to-end apps areas. So they got cut off. The title says the challenges in investing, in generative AI investing. So it's not all roses. It can be difficult, and there's many pitfalls in investing in generative AI, and let's just cover a few of them. So one is really platform dependency, and you can see Zach's tweet. Typically, the norm in the venture capital world is that when you're building on top of someone else's technology, when they cough, you get pneumonia or COVID or die. And here I don't think it's going to be different. So today there's many startups that are taking the OpenAI or some other APIs. When that API changes or when the business model changes, suddenly you can find yourself in a very difficult position. And this is a big red flag for VCs, that there's one critical point of failure. The mitigation, by the way, is that there's constantly new APIs and alternatives so startups can switch from one to another. Competition is vast. So as we saw in the other slide with the landscape, You can already see that there's a bunch of companies in every square. Differentiation becomes harder and harder when we're all built on the same APIs. So that makes it into a potential red ocean, and that's why investing in this space, you need to know what you're doing and try to understand what's really novel versus a copycat. There's IP issues. So already we saw the first lawsuits being filed against some of the image generation technologies, because in order to create these images, they needed to use vast data sets that are other images. And those images were scraped from the web without really asking for permission. So artists and companies like Getty Images are now coming and looking for a smoking gun, saying like, I can prove that you stole my image to create this image. And that's going to get settled in court. But I think it will give pause to a lot of VCs in sort of like deploying into that space before they can get assurances that the company doesn't have copyright and IP issues. There's also malicious use. I don't know if you're aware, but people use ChatGPT, for example, in order to find vulnerabilities in smart contracts, in order to create phishing emails to scam people. I mean, the scammers can get more sophisticated with AI as well. But like any technology, it's not the technology itself that is good or bad, is what we do with it. And finally, we're in very early innings, but there's already a lot of sounds about regulation coming to this space. So you can hear in different statements the fear, for example, from schools, we should ban generative AI altogether. And then other schools actually saying maybe we should embrace it and use it as a tool, and then change the way that we check, test students or check for people's knowledge in a way that leverages these tools rather than ignores them completely. But I think this future regulation is definitely coming. Where is this going next? I think that your guess is probably as good as mine, but you can already see the writing on the wall. Search is being completely revamped with generative AI. I don't know, how many of you reduced the number of searches they do since ChatGPT came? Okay, a lot of you. And the reason for that is that search is basically a proxy to Q&A, right? Like we have a question and we want to get an answer. So for example, I'm planning a trip to Mallorca and I want to know what's a good 5-day itinerary for Mallorca. When I go to Google and search, I'm hoping that someone created an itinerary for Mallorca that is close to what I would like. But there's really no way of knowing, right? Like I know that the page has a high authority and I can know that it's written itinerary for Mallorca, but I basically, as a user, have to try multiple websites and hope that one of them fits what I'm looking for. With generative AI, I can just write a prompt that includes exactly my parameters and then generate the perfect itinerary for Mallorca that's under a certain budget that keeps me from this point in the city to that point in the city. And I could skip that website altogether and think about all the ads that I used to see in order to get there on search and then at the website itself and then the pop-up asking for my email. So search is a huge area that is going to change, and I think we're starting to see the beginnings of it right now. Character AI, the image that's behind this train your own model, is a company that just raised $50 million in order for you to create conversations with specific trained models. So you can have a chat with Alan Turing and asking about his experience inventing a lot of these machine learning models back in the day when there was no really digital computers. You can chat with Elon Musk and sort of like question him about his crazy practices at Twitter, and training your own model and having this like essentially subset of generative AI respond in a certain way could be huge in various products, consumer products, enterprise, customer service, et cetera, Like you can receive an answer from the CEO, generated. And in general, I think 90% of content is going to be machine generated in the next 5 years. So the possibilities here are huge. UI design, you can already use existing image generators in order to create different interfaces. In this example is an iPhone guide to sushi. So it's not necessarily replacing designers, but it gives you the ability to start not from a blank draft, where you're able to sort of like create a prompt that gives you some ideas, refine it, and keep iterating in the creative process rather than sort of like having to figure it out in a room. And I think one area that we're particularly excited about is 3D models and video games. So today, gaming studios spent about $58 billion a year in generating 3D assets for their games. It's a very manual, labor-intensive process that also makes the creation of games very expensive. And we believe that generative AI is going to completely disrupt this space, so we can generate new games and experiences and populate the quote-unquote metaverse with AI. And finally, these are just some of our investments in generative AI. We started writing about this and investing in this space before we had the term generative AI. So if you go to my blog, VC Cafe, you will find early posts on what I call creative automation, creative AI. There's our first investment at Remagine was an AI company that does visual search image recognition. Our third investment was a company that replaces focus groups with AI, so doing predictive analytics for consumer insights. But we really sunk our teeth into it with our one, which uses AI to generate presenter-led videos where you're able to essentially create a video by typing text without the need for a camera. You can select your presenter, man, woman, young, old, etc. They can speak in any one of I think 39 languages. And today they're able to also do 3D templates, which basically simulates a news studio where you're able to essentially have a presenter talk about the news and embed a video within the video, and that's all being AI generated without ever needing to step into a studio. So we invested in our one in 2019. Piggy is a text to mobile presentation. So you can try it yourself, piggy.to/magic. And you would have sort of like a search bar, and you could say, I don't know, create a presentation on starting a business in 2023. And it's not going to be perfect, but it's going to give you the first draft that you can then edit, personalize, change, etc. And you can share it simply with a link. And our latest investment in this space was last year. It's a company called Munch that uses generative AI to create automated video highlights and overlays on the video with AI. And really what they're trying to solve is that our attention spans are growing shorter and shorter. When's the last time you actually stopped to watch a 30-minute video of a lecture? Probably, not recently. But if it was a 2-minute or a 1-minute video done in like a TikTok style, you might as well sort of like consume it. So Munch is in the content repurposing business, and they're able to take the long form video and automatically create it into highlight clips that are then sort of like built exactly for the right size of TikTok, Reels, YouTube Shorts, etc. And I'll finish with a quote by Stephen Hawking that basically understood, maybe ahead of its time, that AI might be the greatest accomplishment of humankind, and we might be on our way to singularity, where sort of like humans and technology fully merge, or it might be the last thing that we do. And it's really up to us to decide how we use this powerful technology, if we use it for good or if we let it be taken over by malicious use. And I think you guys will play a big role in this, so I'm excited to share this with you. Thanks very much. So you're asking about taking training data that's generated by AI, and like you don't want to mix sort of like maybe machine-generated data as part of the training set. So there's simple ways to do that. I think that today the training data that OpenAI uses is basically scraped the web up to 2021. So it's not connected to the internet. I mean, now they're making manual changes because they got caught into some embarrassing mistakes. For example, ChatGPT didn't know that the queen had died, right? And I think that there's going to have to be a balance between continuing to feed the machine with data so you get more accurate responses, but also not including wrong data so you're not being fed something that is completely bogus. So one of the things that happened, for example, is Meta, aka Facebook, released something called Galactica, which is a generative AI model for creating scientific papers. And they stopped it after 24 hours because they realized that one professor found that it was recommended a complete lie, whatever. I'm making it up, but like that eating soap can cure COVID. That's because someone might have put it into the data set as a joke, and then that was spat out as the absolute truth. So I think these language models are not perfect. They still have a lot to learn, but we're also in the very early innings, and I think that's an interesting question that is being dealt with right now. So I'll repeat the question. So the question is, what's your name? Thesis? Yeah. Thesis wants to be an entrepreneur, and he's asking, like in many cases, investors want the entrepreneur to sell the company. When is there like a misalignment of incentives between the investor and the entrepreneur? So first of all, I would say not every business is right for venture capital, and vice versa. Venture capital is not right for every type of business. I would say that venture capital is, let's say, rocket fuel. And if you're trying to get to the moon, that's probably the fuel that you need. But if you're trying to build a small business that it will sort of like sustain you and will continue to grow over time, it's probably not the right type of financing. There's nothing wrong with creating a business that is not suitable for venture capital, but just keep in mind that venture capital is looking for huge outcomes. Now, the question was if I ever encountered a situation where there was a misalignment with one of my entrepreneurs, and the answer is yes, more than once. Most recently, one of the companies I invested in that actually the founder spoke at Juanita's class last year was a very talented founder that basically figured something out very early on, and as a result, the sort of like experienced players noticed that as well and made him a very quick acquisition offer. So just think about it. I invested in a company that I think is going to be worth $1 billion or more. We agreed with the entrepreneur we're going to build a large company. And 2 months later, someone says, like, you're great. I'm going to buy you. And you can pay back your investor right now and then come work for me. And you can build your company inside my big company. And I had to have a chat with the entrepreneur and discuss how many big ideas does a person get in a lifetime. Some people get 2. So that's something that typically you have to align on what you're trying to get with the company before making an investment. These situations may arise. I won't lie, I had to also check the term sheet to see if he's able to sign it without my consent. Typically, you need the investor's consent in order to do that, but you would not want to continue, as an entrepreneur or as an investor if their heart is not in it. So it's more of a discussion rather than a legal battle, and it's something that ideally you align on before. Like when you're dating someone, you want to understand, do they want to get married and have children, or is this like, just to have fun? Same. It's a good question, and I think that's a question that a lot of people are dealing with now. Like, what does the rise in artificial intelligence mean for the future of jobs? And how do I personally sort of like see my role in either accelerating it or protecting us from it? And I think I don't have a great answer apart from to say that I don't think that AI is going to replace humans, but I do think that as humans, we have to adjust to these new tools in order to leverage them sort of like to our benefit. So I was watching a video last night in preparation for this talk where they talk about the evolution of tools. And, like Jane Goodall saw that, monkeys were using tools to extract food in the jungle, and she dispelled the knowledge that actually only humans use tools. And she found that actually there's a lot of tool using examples in nature, but what makes us different as a species is that we're able to communicate the use of these tools from generation to generation using language and then develop them over time. So over time, our tools have evolved, right? Like we had painters that were able to create very realistic pictures during the Renaissance, and then the camera came and they probably said like, great, now you killed painting. Like I was doing very realistic pictures, I was getting commissioned from the church, and like now you have a camera and anyone can do it. But then photography became a form of art, and art itself, developed into modern art that is more abstract and less realistic. And then, when photographers were saying like, I have a profession, I'm a photographer, and then you put a camera in everyone's pocket, then photographers probably said like, great, now you killed my profession. Like I was a photographer, taking pictures. Now everyone can take a picture with their phone. And you see where I'm going, right? Like this, it hasn't actually replaced photographers, but it evolved photography, and so on and so forth. And I think that what we're seeing now is just like a rapid growth of tools and the capabilities that these tools give us, but it still hasn't been equally distributed, so not everyone is aware that these tools exist. So I suspect that there's actually a very interesting fuzzy period in time now where there's a imbalance of knowledge, where you guys are probably smarter than your professors in using AI for your homework, and the professors have to catch up to understand that you're using AI to do that, but you can look really good right now, right? Like you can look really good at work, you can look really good in school. Soon it's going to change, and we're all going to have to adjust, and I think that workplaces will have to adjust too, but the combination of sort of like what's happening in the stock market and sort of the lack of capital, especially at the later stage, which is increasing layoffs, and then at the same time the rise of technology, which is creating more efficiencies and the ability to do more with less, does worry me that like these jobs are actually not getting, it's not that it's a temporary thing, that these jobs are getting lost and then people will get rehired when things are better again. I think that we are learning to do more with less, and I think that we may have to change sort of like this notion of the 5-day work week and the 9 to 5, etc. Like if you look at history over time, like we worked less and less, and I think that we're sort of like more going towards that direction. All right, I have to wrap up. Thank you guys very much.